We'll dip into that in this webinar as well, and the kind of companies we're looking at for that kind of stuff. But that's essentially what we want in the portfolio. If we could look in even more detail, I would say to you, here's the one stock. We can't do that. Not even Warren Buffett can pick just one stock. It'd be too risky. That's why you have a portfolio, and we're looking at about 20 to 40 stocks. And the more risk averse you are, the more percentage of your capital is in cash. Very simple. If you're young and risk loving, you have 10% in cash. If you're 80, you probably have 90% in cash. Very simple. Okay. More cash you hold, the less risk you're taking, because cash is certainty, and the rest is in equities, and you're probably going to have 20 to 40 equities. You might have one or two index trackers like a FTSE, a World All Share, and emerging markets, an S&P 500. There you go. There's 4 names already. Can't go too wrong. You're going to have some gold because you feel FOMO, even though it's quite late. You're not doing it to trade gold. You're doing it just to have 5% anchor in your portfolio. Fine. If you're going to have some Bitcoin for fun for the very long term, maximum 5% if you don't have to. Okay, you don't have my risk appetite, I don't have yours. So don't try to be somebody else. If in doubt, leave it out. Very simple rules. Now, let's turn, before we go into individual stocks and the market outlook and what I like, let's go to AI and where we are. That's one of the big questions for the year. Boom or bust and bubble and all the rest of it. Okay, so there's 2 views on this. Quite frankly, I don't care which of these views are right. I'm not gambling on one view or the other. I'm not going to Ladbrokes and say, I think this will win, this will win. What I'm looking at is individual companies making sure they keep making profits out of this. This isn't my problem whether there's a boom or bust.